Okay, we've got another caller here, and Dan Walkow is, okay, Dan Walkow is my guest, and he's with the cbankcapital.com, www.cbankcapital.com, and if you want to get him not on this program, 866-541-9952 is what you would phone during the week. And we have a caller online, Richard? Go ahead. Is this going to work? Hello, ma'am. Can we help you?
Hi, Rosanna.
Hi, David.
Hi. You have sound tonight.
I have sound. Hello. I have a question for you.
Yes.
David, we are California residents, but we are Canadian citizens. And on the issue of the RRSP, if we were to sell off our RRSP and we incur a loss, can we claim that loss against California state?
Absolutely. Absolutely. Your value is the value that you had when you went across the border. And if you've been filling your 8891, how long have you been down there?
Turn down your sound, too, so that we don't get the echo in the background, thanks.
Okay, sorry, could you repeat that?
Sure. How long have you been down there?
We have been down here for...
Okay. When you went down there, you went down under the auspices of 8945. That's the revenue procedure that the IRS passed back, or the Department of Treasury, back in 1989. It was the 45th revenue procedure they did in 1989, so it's called 89-45. And that's now 20 years old. In 2003, they changed the rules, but you should have been reporting your internal earnings of your RRSP to the IRS and to the state of California. Were you doing so?
To the state of California, yes, but I don't think to the IRS.
Well,
what we were reporting to the IRS was the value, but not the internal earnings.
Okay. Well, by law, under 8945, you're supposed to report the internal earnings too. And then in 2003, they came along and they made it even rougher, and they said you had to fill in a form called a 3520, and that's the form that is on the bottom of Schedule B in Question 8. And for 2003 and 2004, you're supposed to fill in the form 3520, and then in 2005, they came up with the form 8891. Now, if you were doing it properly, when you went across the border and you were reporting to the U.S. federal government as per 8945, your value of your RRSP on December 31st of that year in U.S. dollars, whatever that value was the year that you went down, okay, and let's pretend it was $100,000 even, and let's make it 2,000, and we'll say that in the last 9 years you reported $45,000 worth of earnings, so that you've reported $45,000. If you sold it now for $125,000, you would actually have to report the $25,000 worth of earnings as earnings, because it's still more than the $100,000. And all these laws say that the first thing we do is report earnings rather than call it principal. But if you came across was worth $100,000 and it went up to $145,000 and you sell it now for $90,000, you would have a $10,000 loss on both your federal return, your California return, because you'd been reporting the $45,000 of income every year on your the $5,000 a year for 9 years. On the California return, if you sold it for $90,000, you would have a 45 plus 10. You'd have a $55,000 capital loss.
Because we'd already been reporting.
That's correct.
Yeah. Okay.
Does that make sense to you?
Yes, it does.
Okay.
So I guess the problem in our case is I do not believe we have been reporting the internal growth at the federal level. Is that it?
Well, the answer is, well, first of all, can you tell me, is it worth more now than it was when you went across the border?
Probably not.
You think it's actually gone down in 10 years?
Yes. We're talking about the RRSP, correct?
Yes.
Yes.
Well, okay, it would be an unusual one that's worth less today than it was 10 years ago. That's stretching it, because there's hardly anything I can think of that... Do you know what it is, Dan?
I think you have some gains, Rosanna. There's gains in there on over the book value.
Yeah.
Yeah.
Anyway, so if it's over the book value, the difference between what it was worth a day in U.S. dollars when you went down and what it's worth today.
That's
And remember that when she went down 10 years ago, the dollar was $1.40, and now it's 93 cents.
Yeah.
So
the currency impact, when you translate it back to U.S. dollars, because the U.S. dollar has gone down so much over the last several years,
it's going to be a gain.
So it's going to impact the valuation. Yeah.
Yeah.
Right.
Yeah. So you're going to, even if it went down, if you went across with $100,000 Canadian, and today it was only worth $10,000 or 90,000 Canadian, in 2000 that $100,000 Canadian was only worth 60,000, and today the 90,000 Canadian is worth $83,000 or so. So you've got a $23,000 gain.
Right.
And I just did the exact thing with a lady who moved back to California, an American lady who moved back to California to a house in, I'll call it San Bernardino because that's not where it was. And when she came to Canada, her house was worth more and she's got a departure tax because your real estate out of the country is worth, you have to pay tax to Canada when you depart. And because of the change in the dollar and the fall in the U.S. real estate, she actually lost money on the house for the purposes of Canadian income tax. And it's hard to believe because it actually went up $100,000 in California.
But when you adjust for currency,
she lost money. So there's
big factor. It's been
no departure tax.
Big factor. Yeah.
Now, Roseanne, is it Roseanne?
Rosanna.
I'm going to tell you there are very, 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 very few accountants around that understand it. And I'm sure you found that out.
Definitely.
Okay.
Yes, we're really sorry we didn't find him earlier, as you mentioned.
Well, there's a few around. My website actually lists, I think it's 7 people who are in competition to me. And the reason I list so many people in competition to me, because that's unusual, I think you'll agree, is because most of the time we are so busy that and then we were so busy that we'd like to spread it around. And although we're not right now for some reason or other, we're really quiet right now. It's something to do with the economy, I guess. But also we have couples that divorce.
Yeah, so there's all kinds of
applications. And if you divorce, or I drop dead tomorrow or something, if you were to divorce, then it's quite possible that your husband would want to go to another accountant and you might stay with me or vice versa, or you might both decide you want to go to 2 other people. So I have consistently, since I can remember, listed other people that do what I do in a competent manner on the website.